I figured out the simplest scalping strategy that turns losing traders into profitable ones. Not only has this strategy worked for me, it's allowed other traders to become consistently profitable over the long term. I've compiled a ton of trade examples, so by the end of the video, you will know exactly how to profitably execute it like these other traders. Let's get into the first trade. So every trading day, I look for the key areas of support and resistance. And so what that is looking at a larger time frame chart than what I trade and just looking at where the swings in the market are. Currently, the NASDAQ futures here are clearly in this bigger range with a resistance level up here and a support level down here where the market has clearly bounced off of it multiple times. And then currently where we are right now, the market is in a downtrend into that level. So once I've identified the key areas that I want to look out for that day, I go to a smaller time frame chart and I wait for the market to trend into that support or resistance level. That's what I have found is the best way to become profitable, is not try and fit what the market is doing, but wait for the market to come to an area that you have previously identified and have it fit your strategy. And so once the market gets there, I have a checklist that I go through that tells me when to jump in or when to stay out of taking a trade. Because when the market comes to one of these levels, the biggest thing you want to be looking at is, first off, is the trend looking like it is going to reverse? You don't know what the market's going to do. The only thing that this strategy does is try and help you justify when it's potentially going to shift. And the whole idea is seeing that, okay, well, the market's currently in a downtrend here. When does that look like it could switch and start going into an uptrend? That's the whole trick to finding consistent reversal trades. And so the first thing in my checklist is figuring out if that trend is broken. And so the super simple way I like to do that is just using a trend line off of this swing up here. You know, it's pretty easy to match off of those two highs, and the trend line was broken. And so for me, I consider that as, okay, the trend is starting to lose steam. And so we can start to look for another couple things to see, okay, well, is the trend gonna potentially start shifting momentum of slowing down and then starting to go sideways? And can we see a couple signals here to buy it and then catch the move of it going up? And so the next thing on that checklist is looking for what I like to call an exhaustive move. This is probably the number one pattern that I found to be extremely reliable at helping predict these reversals, is looking for this kind of exhaustive move where the market makes a bottom here. You can see it was in this nice downtrend, you know, trending down nicely. It broke that, but then all of a sudden there's massive bars coming in. The market tries to push lower and it starts to fail. And so because of that, I like to think of that as the market's making its final attempt to, you know, push this trend lower. And if it was going to, it probably would have kept going because this is a lot of momentum. And if it was going to keep going lower, it would have. That's just kind of how I've realized the market works. And so that's kind of the third thing in my checklist. And so from there, what I look to do is the next thing is, once it's made an extreme low like this, is I want to see it almost make another final attempt to keep going lower, but I want it to basically make a higher low here. And you can think of it like a head and shoulders pattern. That's a really clear way of thinking it, as the market's come down here and made a very clear head and shoulders. Now that's if this section right here goes up. And so that's what I'm looking out for as these candlesticks print. And so to go to my recording now and show you the real-time entry of me entering into this trade, you can see I have the same things I'm looking at here. Is, you know, the market's made a bottom here. It looks like it's making another bottom. And so for me, I'm trading on a 5-minute chart of the NASDAQ futures. I found futures are really good for banking a small account. You can trade really small, but then you can scale up really big, and allows you to day trade on a small account. They can give you, you know, about 450 times leverage. It's pretty insane. So if you haven't tried futures, I would definitely check them out. But so for my final thing for entering into this strategy is looking for a really strong bullish candlestick to confirm the trade entry. And so here you can currently see, and I always wait for the candlestick to finish closing, because you can see here, this one, I have this timer here that I've made next to the candlestick. It's counting down until the candlestick forms. And so the candlestick did look really bullish here. If I just zoom back a little bit, it was looking really strong here. And so while I was looking for this is, I'm sitting with my finger on the buy trigger, right? Waiting to enter into the trade. And so seeing that, you can see my mouse moving around. I was feeling a little FOMO, but you have to be patient. You have to wait for the signal to show up. The scariness here is, that I'll potentially miss out on the move if it breaks higher, but that's just how you got to play it out. And so I sat there and waited, and you can see, well, 90 seconds can really change stuff. The market all of a sudden shifted way lower, and now it looks like, okay, I don't want to touch this. This doesn't look good anymore. And so this is where kind of reading into the candlesticks can really help, and is really important with the final signal to get into this trade, is because the market could have just started to puke lower right here, and right here this looks really bearish and potentially going lower. And so I'm thinking, okay, well, if this next candlestick becomes really bullish and reverses this, that's something I want to get into. And I actually said that in my chat room, and so other people were able to take advantage of this trade entry I got into. And so a big thing was just waiting for that reversal to happen. So you can see it took a while, but again, patience pays off, and the signal showed up, and I jumped in on the trade pretty much a couple seconds as it was from filling. I'm okay jumping in a couple seconds beforehand if it really looks like it's gonna get away from me. And I was trading at basically max size at this point. And so from there, to kind of speed this footage up, as this trade took a while because it is on a 5-minute chart, so the candlesticks take a while to happen, I then always put my stop loss below this swing right here. Your stop loss is almost the most important thing you can have in trading, is because if you don't put your stop loss in the right place, your trade could get knocked out before you've even given it time to play out, or you are risking way more than is necessary. And so for me, where I have found that that's important to put is below this swing right here. The whole idea with this is, we have a head and shoulders here. And if this head and shoulders, I'm getting in basically right here. If this head and shoulders is going to break out higher here and start a trend up, I want to get out if it instead comes down here and breaks that and keeps going lower, because at that point is, you don't know what the market's going to do. It can do any sort of thing at this point, right? It can go up, sideways, or down. And so the whole idea is having that math play out in your favor. Think of it like going to the casino, of essentially you're gambling, but the odds are in your favor. Let's say 50% of the time you're right, but more often than not, you make more money than you lose. And so again, it plays out in your favor over the long run. And so for me, I always put my stop loss below that level. Another way you can do it, especially if you think the market's pretty choppy, you could put it below this extreme low. I've always found though, if this low gets taken out, it's pretty dang likely that this extreme low is going to get taken out as well. So I just do that to reduce my stop loss from there. And so once the market starts to break in my favor and, basically make this W pattern back to where the market opened and started to sell off, is I moved my stop loss up to break even, because the idea is it started to go in my favor. It started to work out, and I'm okay at getting out at break even if the market's just gonna sit here and chop. The whole goal here is to go for the bigger picture reversal. Looking at a bigger 15-minute chart again, well, I'm not looking to capture, a tiny little move like this, right? I am looking to see if, well, maybe I can capture some kind of big swing like this. Maybe if the market's gonna bounce here, I can capture another big swing like this. And so that's what I'm looking for to do. And you can see that did actually eventually happen. And so that's why you don't want to be too tight with your stop loss. You can see it did get close to knocking me out right here. But again, that's, the market, that's how it plays out. Sometimes it gets close, sometimes it doesn't. And so from there, is the market did start to get going in my favor a little bit and start to pick up as the trend, again, thinking about that big picture, is the big picture is you got that downtrend, it starts to lose that momentum, and it takes time in here for that momentum to shift from down to start to going up. And so think of it as supply and demand, there's a lot of sellers coming in, now there's a balance, and it takes a while for that balance to become imbalanced, and then all of a sudden the price gets pushed up because there's a lot more buyers. Letting this play out definitely takes a lot of patience, and slowly moving my trailing stop loss up as it, makes a little pullback here. Is the market came back here slightly, and then, it's basically, you can see I have a trend line in here, and so that's my idea is, okay, I'm going to manage with this trend line as long as it holds it. If it starts to break it, I'll get out of the trade. I'm at about 3 times my risk right now. I'm risking about $600 on this trade. And then normally I like to go for about 3 times my risk. But recently I've been starting to open up my management style. I've kind of started to hit stage 3 of how I see you should manage trades. You know, stage 1 is kind of going for a fixed profit target all the time. Stage 2 is starting to kind of loosen that up and become more fluid. And stage 3 is really reading what the market is telling you at that exact time, because the market's always different. And so being as flexible as possible is as important. And so I actually left my house and went to a coffee shop and started managing this because it was going so long and I kind of wanted to get out of the house, and that's where I like to work sometimes. And so for here, you know, I was okay doing that because I thought, you know, well, the market's moving slow in the sense of it takes a while for my signal to really tell me to change my stop loss. And so once it kind of got to about here, this is on a 5-minute, over here is a 1-minute chart, I started to realize, okay, this thing is going a little parabolic. I can't wait until it comes all the way back down here. You know, that's like $1,000 worth of movement, maybe even more, that I'd be giving back up. And so you can see here, once it does that, I started to, if we look at a 1-minute chart, this is kind of what it looked like, is there was a really tight upwards trend. And so I thought, okay, I'm going to manage it based on this upwards trend line and moving up with these mini swings. And so I moved up with this swing, and then I moved up with this swing. And then the market came up here and eventually broke this. But it, you know, again, it took a little while to do that. And I've realized with trading is, you know, when the market does this, this is where it's at right now over here, is it's coming up and making these little moves up. And every time you're, you know, this is my biggest trade at the moment so far. I've never had a trade go, I think this thing capped out at 3,700. And so these moves they're a lot of money, and that it's the dollar sign is getting more. And so what I've realized to help manage these trades as they go more and more in your favor is start to just think about, it doesn't matter what this is. What matters is where my stop loss is. Okay, where is my stop loss and what do I need to do based on what I'm seeing the market do? And so that's what I wanted to focus on with the market. And so even though, you know, I moved it here, and then you can see here, it basically almost came and touched me there and knocked me out. And then it does a couple more big bars. And I'm starting to think this looks like a climactic move. Kind of on the flip side is, once I saw this rip happen, you can see it happen right there. And I, you know, pretty much made an insane amount of money as it moved up there. I just thought, you know what? I don't know what the market's gonna do. I'm okay having my stop loss down here because, you know, maybe it continues to go parabolic and keeps going higher, right? You don't know what the market's gonna do. And moving my stop loss up to here would feel really, really dumb if it decided to, you know, just keep going higher. Managing is very, very difficult, and I would always suggest not doing that as much when you first start out. But as you can see here, it can really allow you to unlock some really big potentials. And so what we're looking at is oil futures. And so again, as always, 15-minute chart is the first thing I look at. And you can see right here, coming into the first thing of the day, kind of 7 a.m., 6:30 a.m., I'm just looking at, okay, where are the lows? There's a high right here. There's kind of, the market had a sell off here, and it's kind of come down to here, bottom 2 times, and then there's been some swinging in back and forth here. And so that's where I just kind of draw these levels off of. And so what we're looking for is the market came down to this support level right here. And then I went from there into the 1-minute chart we have right here, and I looked for reasons why this could reverse. And so the one thing about this trade was, if we look at a 5-minute chart of oil, is the market was really back and forth. And so when the market gets like that, and you can see it's really choppy, it'll sell off but come back up. And so the idea is, well, is there that risk reward ratio that we're looking for? Is there the potential in the market to have a greater move in the direction quickly that we can easily capture and reduce our risk with a smaller, you know, tighter stop loss that we can get in? Usually I have been trading oil on a 5-minute chart, and if I tried to jump in on a long down here and, you know, set my profit target of 3x up here, it barely makes it. So it does make it, but it's a lot harder to kind of get that risk properly. And so what I decided to do was go in to a 1-minute chart. I think that allows me to have a more accurate entry. That's the whole idea of the smaller time frames, is it allows you to get a more accurate entry. And then I'm sure at this point, you know, we were at a support level. We're looking for that downtrend to slow momentum. What I saw for the biggest reasons that the momentum was slowing down, which is kind of a little interesting here, is look at this candlestick right here. We had some big candlesticks right here, and then there's this massive candlestick going on right here. And then it reverses and kind of goes back to lows here. And then we go into sideways chop. And then we had a breakout candlestick right here. And so one thing is what I used to do is I would see this breakout candle here forming. It looks like a massive green candlestick. And this is why I don't jump in long based on the break of that trend line. I like to wait for it to make, you know, the signals that we're looking for over here. And we'll talk about it in a second. Because if you jump in right here, well, sometimes it'll happen and it'll work out, but a lot of the time you're jumping in based off of FOMO. You're jumping in, you know, because of a couple things you see, but you haven't really waited for the signal. You know, it's more of a reactionary trade entry. There's a lot of funky market movement going on right here. I think maybe there's momentum to keep pushing lower. And so one thing I like to look for is almost that final attempt for the market to break lower. Essentially that failed breakout, that attempt where it really attempts to go lower and then it reverses, essentially trapping people or baiting people to, oh, the market's gonna break out here. They get excited, you know, they jump in. It really dries up the sellers in the market because they all jump in, and then it reverses and makes a really strong potential for there to be an immediately flip in the market. And so to show you that forming in real time is here I'm just watching, waiting for the market. It's kind of looking good. And then all of a sudden we have a massive momentum push lower with this candlestick. It's turning red. It's attempting to break lower. And then you can see it immediately flips here and goes higher. And so for me, it's doing that bait and switch to where I think, okay, that's a really good show of it tried to go down. There was a momentum to go down. And then it shows a massive switch in momentum of the market going higher. And then from there, I jump in, I use my tool to tell me, okay, I need to get a certain amount of contracts based on my risk. And actually my tool said I needed to do 4 contracts and I accidentally entered in on 5. And so I was actually slightly larger size on this trade. And so that adds to the intensity. And this trade happened really quickly because it's on a 1-minute chart. And so while this is happening, it's pretty intense. For me, I don't know what you do while you're in a trade, but when I'm in a trade and I'm just kind of waiting for it to play out, it's kind of nerve-wracking. And so what I do a lot of times is I, you know, walk around in circles around my room, talk out loud essentially of what I'm nervous about and why I want to get out. Essentially talking through the emotions that I'm feeling because I don't want to jump out because I'm scared. And so what I did was, you know, I just talk through that and say, no, you know, I'm following my strategy. That's what I'm doing. And so because I was already up 3x on this trade and I was a little larger size, I elected to actually close out pretty much when this next candlestick closed. Because this is a large candlestick, you can see we essentially have an exhaustive move. It's a lot to wait for it to come back to that trend line here because you can see if I waited for it to break this trend line, I would have given up probably about half of those profits. And that is not something I was looking to do. It had made the move we were looking for, you know, take the easy money and kind of get out. The 15-minute chart of oil for this to show you where that level was. And so the market, this is kind of a really far level. I don't normally go this far back in levels, but you can see that there was a very high up here where the market had sold off from, and it's been like 2 weeks before we've come up there again. And so zooming into today, the market had come up there, sold off, and then it had kind of been a little choppy. And then we had kind of a spike up into it, going actually to a smaller time frame chart to show that a little better. The market had spiked up into that level, sold off, you know, a little FOMO even off of this move, being like, dang, that's a sweet move. I wish I caught that. And then seeing the market come up here again and remembering, hey, just be patient, wait for the thing to come to you, and you know, wait for a setup. And so got in based on the market had kind of chugged up here, a nice movement, and then you can see our classic exhaustive move. This candlestick right here is massive out of nowhere, right into our level. And so what happened was I figured, okay, that looks like it's doing a kind of climactic move. It had a little bit of a sell-off, pull back to that. Like always, I want to wait for that lower high or some kind of retest and pullback that the market does, because I want to see the market, well, you know, maybe the trend keeps going here and you can see it's still kind of in our trend line. You know, it's not a clear break. And then right here, it set up an actually good looking candle for this. And so because of that, it made kind of a nice double top. And so I didn't actually get in on this candlestick right here because it's kind of small. And so what I did instead was the second candle after it, it was a pretty good bearish candle. And so I thought, okay, these two candles combined show, I would say, a candlestick that looks like this. It's kind of a pretty big bearish candle, and I want to jump in at the break low of that candlestick. So this isn't the normal style that I get in all the time. A lot of the time I like to wait for the one candlestick, but this one I kind of waited, saw that, okay, well, maybe it comes here, maybe it goes up here and keeps going. But once it kind of broke this, I think that was a solid kind of entry. And from there, well, things went pretty well pretty quickly. There was news coming out at around this time I knew about. And so once the kind of market moved down to here, I moved to break even just in case there was some crazy news that switched the market against me, and just made a massive candle. I don't want to turn this into a loss, right? But then once we got down here, this is about 3x. $1,800 is 3x. And so I'm thinking, okay, again, I don't want that news to come back on me. I want to ratchet up my stop and get these profits. It's the end of the month. I want to just add on to my month. There's definitely in the back of my mind, I'm still thinking of the results, even though I try and remove them from my screen and as much as possible, not think about them. And then, from here, I'm looking at, okay, there's previous candlestick. That's what we're looking at. This starts to move insanely fast. And so this is where the news pops and you can see that the market goes crazy. And so I'm thinking, okay, what do I do here? And so to manage this, I'm thinking that, okay, I can't wait for the market to pull back on me like this. You have to tighten up way more than normal. Usually I have a previous candlestick trailing stop or like middle of the bar, but this bar right here is like $1,500 worth of movement. And so there's no reason to let the market move that far back on you. At some point, you do have to think about the money and you just have to close out because this is some crazy news. Sure, there's the potential for it to pull back and keep going even more, but don't get greedy, take the easy money and just move on with your day. And so if we look at the ES futures here on a 5-minute chart, what we can do with these bigger picture ideas is you can use a larger time frame to see where resistance and support levels are, and you can look for reversals between them. And so with the market currently right up here, we can look for a potential trap to happen, jump in on that, and then look to catch a reversal down to the lows of that area. And so if we zoom in on this right here, the market does a little bit of a breakout here and fails back in. And so that's the kind of trap we're looking for. And so if we go to a 1-minute chart to kind of see what that looks like a bit more, is here's that previous high, is the market has really strong bullish candlesticks here. White on my chart is a bullish candlestick and blue is a bearish candlestick. And so what you have is a nice methodical move higher, a little bit of consolidation happens, and then all of a sudden you have a big bearish reversal candlestick. And so this is a 3-line strike pattern. This is a domino effect showing pattern I really like. And so what this shows is either traders are starting to short here, putting sell orders, betting that the market's gonna go down, or people that were buying over here are now trying to get out of their trades and cut their trades for a loss. And so seeing that triggers to me that, okay, the market is looking to reverse here. I don't just jump in when I see this, because you can see that the market starts to chop around here a little bit. And so what I want to see is I want to see a final confirmation of the market attempting to go higher. The whole idea is it's confirming that trap. As the market breaks up here, comes down, and it makes one more attempt to keep going higher here. And if it doesn't break this high and starts to sell off here, generally making a big bearish candlestick, I will jump in short there and bet the market will go lower, because that'll confirm the trap for me. And so again, we're here on a 1-minute chart in the ES futures, and essentially after seeing this candlestick print, that was good enough for me. So to show you what that looks like in real time, right here, the market is attempting to break higher here and it starts to fail. It makes a good bearish reversal candlestick right there, and then followed up by a big bearish candlestick as well. And so I think that is a great signal. And so I put in an order there and bet the market is going to go lower. And then I always put my stop loss above that lower high swing that was made that I signaled to get in on. And so from there, you have to let things play out. Another thing that actually confirmed my signal is over here on the left on a 5-minute chart, is it made a lower high as well. And so to me, what that does is it signals a lower high confirmed here. It's a nice big bearish candlestick. And so getting in short there, it's aligning with the 1 minute chart. And so from there, I look for the market to go lower. And so on my recording, you can see now I switched over to a 5 minute chart. And the whole idea with this is using that bigger picture to domino into capturing the larger swing in the range. And that's the whole goal of using these larger time frames to find a resistance or support zone, because from there, once the market starts to break down here, well, the only thing holding it is there's a little micro, you can see there's a little micro support level here. And so my thinking is, okay, market's looking great. I just have to let it do its thing while the trade plays out. I think that it might find a little bit of support here, but I don't think that's the big picture play. I will move my stop loss down to break even once it kind of gets down here. That was my whole idea, is because, well, you know, I don't know what the market's gonna do. It could come down here and bounce and go higher. If that happens, I wanna get out. But I think it's probably not gonna do that. I'm fine giving it a little bit of wiggle room, because I do think the big picture is it's gonna move to the downside here. And so that was my whole goal. It was just managing the trade and letting it move as far into this swing as possible, because I think it's more likely to find support somewhere down here. With the idea that I think it's just air here, I'm okay letting it have swings back against me. Now, if we zoom into a 1 minute chart, because I like to manage on a 1 minute chart when there is a clear downtrend in place right here. You can see there's a nice downtrend line kind of bouncing off of from this high, bouncing here, and now it's starting to confirm that it's bouncing off of right here. And so that's why I move my stop loss down again, is, you know, I want to capture my profits as the trade moves in my favor, because at the end of the day, you don't know what the market's going to do. It could just decide to all of a sudden have one candlestick reverse all the way up here. And so you have to capture your profits as the trade goes in your favor. Now, of course, big picture wise, I would love to try and hold the trade all the way to those lows. But, you know, the market will sometimes have moves in the middle where they knock me out. And so currently we're about 3 times my profit. And that is my general target that I like to go for. Anything more than that is great, but I'm also perfectly happy with managing the trade a little bit tighter if it breaks this downtrend line. One thing I want to highlight that really helped me manage this trade is on the left side, we have the NASDAQ futures, and on the right side, we have the ES futures, both on a 5 minute chart. And you can see that they are very, very similar. But both of these being at the same time, about 7:40 in the morning, is you can see that the NASDAQ was already at the support level that I had drawn, and the ES futures were not there yet. And so to me, what that says is, well, maybe we start to find some support here, because one of these markets has already given that whole move up. And so I think it's less likely that we keep going lower, and we could find some support here. And so because of that, I started to think about, okay, what does this look like if it's going to keep going lower or reverse and go against me? And so for here, what I did was I still want to move with this downtrend here, but once it starts to break lower here, I trailed up to right here. And so what happened here is the market did the exact same trap on the reversal side. Is it on the NASDAQ here, it looks a little more cleaner, is it barely broke lower and then reversed, starting to look for a potential reversal higher. And so from there, I jumped out of that trade, capturing a really nice profit on that swing. Currently, this is a 15-minute chart of oil, and this is where the market was trading when I opened up my charts the morning of the 5th. And so all I'm looking for is, okay, where has the market been swinging and reversing off recently? You can see here, the market's come up here, bounced off a couple of times, sold off, come up here again, sold off, and then come up here again. And this is where it's currently trading. So because of that, I'm going to draw a resistance zone up here, expecting that, okay, the market is likely to reverse off of that level again. It's an area that I want to be paying attention to. And then down here as well, there is a zone that I've drawn from previously before I can even see data over here. And so as well, you can also honestly pull this up a little bit to match even these bounces right here. And so going into trading, that's going to be an area of support that I want to pay attention to if the market sells off all the way. But currently, because the market's up at this level, I want to look out to see if the market's going to reverse here and capture a move. My risk would usually be smaller, and then I would be likely to catch a larger move. So that's where the risk reward ratio comes into play, where I risk a small amount and gain a large amount. And so here, this is a recording of my trade from that day. And what I look to get into is the first step is looking for that resistance or support level. I am betting that the market is going to go down here. And so I'm shorting the market and I'm going to make money as it goes down in my favor. Now, this next big step is because when you're reversal trading, you're essentially betting against the trend. You have to wait for that uptrend to lose momentum, and then you can expect it to reverse. Because if the market's just in an uptrend and you try and randomly bet that it's going to reverse, you're going to get burned a lot of the time. And so the big keys that I have found is making sure that there is any clear uptrend that we have in play that is broken, and then as well seeing a couple of other catalysts that we're going to go over. So that first step is seeing that uptrend is slowed and broken, and just looking at the swings, you can see it's really starting to slow down and go sideways. There's a couple of uptrends here that are clearly broken. And so the second step is that I like to wait for is a lower high in the market or some kind of reversal pattern. So if I reverse here just to kind of show you where I actually got in, is the next step I wanted to look for is some kind of reversal catalyst. And so if you see here, the market made an attempt to break out here and reversed a lot. It gave this whole little move back up. And what that signifies to me is that there is weakness in the market and sellers are starting to come in, pushing the market back down. And so just because the market regains and has this little move up here doesn't mean that it isn't a good spot to get in and bet that the market is going to go lower. The way I see this is the market has made a attempt to break out here. It's been rejected. And then it makes another kind of weak attempt to keep going higher. And there's this tight little uptrend here. And what I'm seeing here is a double top. And so because of that double top and a break of this downtrend, I actually elect to get in short, expecting that the market is going to reverse here. And so this can be really scary because the market can quickly reverse here and knock you out if you're wrong. But the idea is with that risk reward is there's a small amount of risk here and a potential to catch a really large move. And so you don't have to be right very often to be consistently profitable over the long run. That's the whole goal of trading. And so, I maybe got in a little bit early. That was a pretty aggressive entry, but right here, this is another very good entry to get in and bet that the market is going to go lower. Now, the way I manage my trades is if we zoom forwards now, because it takes a while to play out. This is a minute chart, even though it takes time. Now, the market did almost come up and knock me out, but you have to just sit on your hands. The whole idea is I want to wait for the idea of the trade to play out. And what I mean by that is the idea is that it's going to come up here, go sideways, lose momentum. I'm going to get in at some point, and then it's going to reverse. You don't know how long that's going to take. And so you have to let things play out and let it chop around and do whatever it's going to do, because you don't know what the market's going to do at any time. And so you just have to wait for things to play out. And so a big thing I was watching, there's this little minor support level here off of where the market bounced here multiple times. I'm going to expect that the market's going to find some support here, but because it's a minor level, I don't want to get out of my trade when it has a little bit of a bounce like this. I'm looking at the big picture, and again, if we look at the big picture on a larger time frame, I want to try and see if I can get a larger move like this. And currently the market probably looks like this. It's given some of that move right to that little minor support level right there, but I want to try and capture this. And so I want to give it some wiggle room. You can see I moved my stop. I had my stop here at break even. So if the market does come all the way back, I don't lose any money. And then once it makes this reversal here, and it gives this kind of move back up, my idea with moving it down here is, well, if it comes here and bounces again and goes higher, I definitely want to get out at that point. And then once we get to down here, this is at about 3x my profit. And I want to tighten up my stop loss because I do want to let it have some room to go down. But I also have a plan and rules that say once it hits 3 times my profit, I get out of the trade, or I trail up my stop loss to the previous candlestick's high. And you can see with these big bars here, it's likely that if it does reverse, it comes back really quickly. And so there I got knocked out of the trade. Now, the one pattern I think is probably the most powerful and consistent other than the failed breakout is look at this market right here. The market's trending up in clear higher highs and higher lows. And that's kind of how an uptrend works. And so how an uptrend then flips is just, you know, the market starts trending down, right? And so it starts making lower lows and lower highs. And so because of that, what happens is it makes a very consistent pattern right here, and it's called a head and shoulders pattern. And so once you kind of see it right here, and it makes this lower high, where this high right here is lower than the one before, it's showing you that there's a potential for a shift in the downtrend, and we might start to get this afterwards. And so again, you know, with trading, you're always just trying to predict what the market's going to do. Nothing's guaranteed. Just because you see a head and shoulders pattern right here doesn't mean that the market is all of a sudden just going to shoot down. It could totally just go sideways, or it could totally go up. And that is just a part of trading, right? It's all about the odds and setting it up in your favor. What we're trying to do with all of these patterns is increase your odds of having a successful trade outcome. And so with this trade, you can actually see I also had a little failed breakout up here. And because this box up here is a resistance level that I'm watching, and so the top of this is the previous high. And so this wick of this candle right here barely broke above that. And so I would consider it still that kind of an attempt at a breakout, because you can totally have times where the market comes up here and reverses right here. And so it doesn't even try and break out. It attempts to break out here. And so because of that, you know, we have our head and shoulders start to form once the market moves down here. But then the key is to wait for it to make this other pullback. And so the hard part about this pattern is a lot of the time in this area, when you are seeing the market sell off right here and start to make, you know, a big bearish candle right here, it's starting to go lower. It's hard to not FOMO into that and think, oh, I've missed it. You know, you can even see this uptrend line here. It's broken that. And, you know, you think you're going to miss out on the move. You know, you're expecting it to happen. There's a resistance zone up here. And so you have to be patient and wait. And, you know, if it does just sell off from there, just accept it and move on. The pattern is more consistent and profitable. You know, a clock is correct 2 times a day, you know. Going short or buying the market in some random direction at any time, you could be right, generally 50% of the time or something. And so learn to be patient and wait for the strategy and pattern to show up, because you will find so much more profitability in doing that. And so once it makes this, you know, pullback right here, what I like to do is get in on this bearish candlestick right here, because to me, if you kind of read into these candlesticks right here, is, you know, from the high here, the market has come up, sold off, and then these like 4 candlesticks kind of show the market pulling back and then reversing it. So I think that makes that lower high right there. And so I jump in on that. And from there, I put my stop above this lower high, because, you know, my thought is, well, if the market kind of breaks above that, I think it's going to keep going in an uptrend, and, you know, you got to move on, right? Trade's just not working out. And so it gets close here. And so that's where you have to just give the trade time to work out. You have to let things play out and not move your stop loss too quickly. You want to give time for the pattern to start moving, because, you know, still here, it still looks really good. And even when it kind of got close to knocking me out, you know, it could still look good. You don't know what the market's going to do. And so from there, the market started to go really well in my favor. This is a 5-minute chart actually of oil futures, which is what I was trading. And I switched to a 1-minute chart to manage it, because I saw that it was in a really tight downtrend. And just going with back to our, you know, idea of flushes. Well, if the market flushes down, it's likely that it could flush back really quickly. And so that's why I close out as soon as it breaks that quick flush down. And I close out for a nice profit right there. Now, an even better example of that is this trade right here. Now, one thing, if you haven't noticed, is on all of these trades, I have a trend line, because the biggest thing is to make sure that when you're looking at for reversals is that this uptrend is broken. And so here, this is a super clear example. You can see the market's clearly in a nice methodical uptrend, and then all of a sudden, boom, there's a ton of bearish bars here. and then we have the market start to make another bullish move up, and again looking for kind of that exhaustive move that it makes, or that attempt to keep going higher fail. And so right here it's starting to fail, and so my thought is, it makes one final attempt to go higher there, and I'm thinking, boom, we got to get short right here, because once it started to lose that momentum there, you can see that it's going to give up. And so again, this doesn't happen every time, it's not guaranteed. It's more of, I've realized that over time you have these pushes higher like this at key areas, that it's gonna sell off really well, and it's going to give you an opportunity to capture a high reward, low risk trade. This is my low risk reward tool, and those lines are 2x, 3x, and so I got out there at 2x once it kind of broke that downtrend. Maybe a little early, but again, I like to go for quick moves off of these levels. Looking at this chart of oil right now, with the market currently trading right here, just looking at where it's previously bounced, these zones I'm drawing are areas where I likely think that the market could bounce again. And so when it comes down to this level, I'm gonna look for a potential reversal. That's all I do, is I look for reversal trades, because I found that they give you way better profitability over the long run. And so I draw these levels off of a 15-minute chart. I trade futures. You can really trade whatever you want, and on different time frames you can use this as well. But the whole idea is drawing these zones off of a larger time frame makes them stronger, because the larger time frames are more likely to be respected. And then once I do that, I just wait for the market to come down into this level, look for a simple entry checklist that I've developed over the years, and I jump into a trade based on that. So going into a smaller time frame chart, now we're looking at a 1-minute chart. Every morning I start trading about 6:30 on the West Coast, and I just wait for the market to come into this level. And so we're in this larger support zone, and so I'm just waiting for signals to show that the market is going to reverse. And so the first thing in that signal is assuming, okay, when is this downtrend going to break? The whole idea with trading the markets and predicting things, the market has 3 trends. It'll go up, sideways, and down. And so when I first started trading, I always heard that, just trade with the trend is your friend. If you buy somewhere in here and you just spot where the trend keeps going up, you can make a ton of money. And I always found that that was really hard. What happened most of the time is when I jump in, I would jump in right here, and the trend would either start to go sideways or reverse. And so I realized that what I could do instead is start to try and predict when the market's going to do this, go from sideways to down, and you can have a way better risk reward ratio as well, where you risk, let's say $100, and you can be making $300 or $400. And so you can get a lot better risk reward return. And instead of trying to jump in on a trend when you aren't really sure when it's going to continue, you're waiting for that trend to slow down, end, and reverse, and then you jump in and get in based on that. And so the first thing for that I realized was, okay, I have to make sure to know when is this trend broken right here. And so that's kind of the first step is, you can see we're in a solid downtrend, and we're actually breaking out of this big support level that I drew off of a 15-minute chart. And so what I want to do going forwards is, okay, where is there just a simple trend line? And so kind of this doesn't really match. And so I just go off the basic philosophy of just do what works, what matches. There's no hard and fast rule of it has to perfectly, touch this and hit this exact spot. It just, it's pretty clear to understand, okay, here's kind of the downtrend that the market's in. And, at this point, it's clearly broken that. The whole idea is just seeing when that momentum is starting to switch. It's not about trying to jump in right when the market bounces like this, because that's honestly impossible, and that's gonna lose you a ton of money because you don't know when the market's going to do that. It can just be kind of random sometimes, and so it can look really good in terms of risk reward if you just got in right at the bottom and then the market just shoots up, you can get 10x. But my experience is that's really hard to do. It's better to wait for the confirmation that it's okay, it's starting, and then wait for the market to make some kind of pullback like this, and then jump in based on that. And so that's kind of my first or second step, really. The first step, is waiting for the market to come to one of these levels. If you don't wait for it to come to a bigger important level, then you're just going to be trying to reverse the market randomly in an area that doesn't matter. And if you look at kind of the big picture, if we go back to the bigger picture chart, it's more likely to reverse at these extremes. It can totally reverse randomly here in kind of the middle of the range. But generally what I found is if you reverse at the more extremes, it's more likely to give you a larger reversal like this. And so that's what I kind of target, is you're going for the almost sure thing. Now, of course, there's nothing in trading that's a sure thing, but the idea is that this is more likely to kind of be a home run in a way. And so the next step that I like to see is I like to see that momentum switch. Is, right here, these on my chart, my bullish bars are white and my bearish bars are blue. But essentially, I want to see a bunch of bullish bars. And these bullish bars right here really show a lot of that momentum starting to shift. Because if you just look at this trend, it was kind of just down, 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 down. And if it would have kept going down, it probably would have kept doing that. And so instead, there's a clear shift and a break and a switch like we're kind of looking for, a potential start of this, and which can potentially start a bigger move. And so part of that as well, what I like to see is essentially a trap where the market essentially baits people into thinking that the trend is continuing lower. And so how that plays out is the market bounces here, starts to go up, and then you can see it has a bunch of big bear bars here, and it looks like it's going to continue lower. And so a lot of people that are seeing this trend, like me in the past, continuation traders, they think, oh, this is a pullback. Look at this momentum. It's going to break out here and keep going lower. And so they're going to try and jump in thinking that the trend is going to continue lower. And in reality, this, for me, I've noticed that this is a signal that we're actually starting to slow down and we might start to reverse. And so the old me would have jumped in here betting that the market's going to continue lower, and I would have had a loss, and it would have just been very, very frustrating. And now I've started to realize that no, this is the market essentially showing that it's starting to reverse. And so here it kind of makes that trap, pushing people lower. And you can see it's also making a double bottom. It's super basic signal. You do not need very fancy patterns or indicators to be consistently profitable. You can see all I'm doing here is a simple analysis of what the trend is doing and the candlesticks are doing, and that's all I use. I've tried to use indicators and fancy patterns in the past, and really just looking at for these simple patterns has consistently made me money. Compared to before, trying to do all that fancy stuff, it just didn't work out. And so essentially right here is I am looking for that pattern to happen. And so to quickly look at the final confirmation I like to wait for is I want to see this little mini trap here push the market lower and then get rejected. And so that's what I see in kind of these three candlesticks right here. Is it's got a bullish bar, kind of a doji here, and another doji. And this actually candlestick, well, I got a recording to show you of me actually entering in the trade and showing you how I manage it. And this one actually was bullish before it closed. And so, but it ended up being a little doji, and that's totally okay. The idea is it still kind of made essentially a little bottoming pattern. And so the next candlestick was then a really strong bullish candlestick. And so what this does is it's showing you that momentum switch. And so once I see that confirmation of that strong candlestick, I actually have a drawing tool that I use that I've created for NinjaTrader that tells me I need to enter into 3 futures contracts to hit my risk target of roughly $700. And so I essentially try and target actually $800 of risk every trade, but depending on where my stop loss and my entry is placed, that'll depend on how many futures contracts I trade in. So not to dive into this too much, but essentially all this does is it helps me figure out how many contracts to trade, and then it just says, here is my profit if I get to 1x, 2x, or 3x. And so if we go to the recording now, that's the tool that I use to tell me, okay, I want to put in 2 contracts here. I want to go long if this candlestick breaks above the previous candlestick. And so it broke above there. And so I thought that, okay, it's made that nice clean double bottom. And if it makes a little bit of a higher low here, I want to get in on this breakout. And so I jumped in long. I traded 2 contracts because I was actually planning to scale in. This is something I've started to do, which we'll talk about a little more in a minute. And so from there, I just bet that this market was going to go up. I put my stop loss below this double bottom. I always put my stop loss in a logical place based on the price action that is happening. And if you saw that there, I actually added on another contract. And so I've started to scale into my trades as I've got larger size. And what I did as that confirmation was I thought, okay, this is a really nice bullish candlestick like we just talked about. And I jumped in one more contract right there. And so I scaled in with the idea that, okay, I like the signal initially, but it's not enough for full size. And so I scaled in again with saying that, okay, I like the signal even more now. And so, you know, my entry was actually like here and here, but the way the system works is it kind of averages out to your entries right here. And so from there, I just have to let the market play out. And the biggest thing that I have learned over the years is you have to let things play out. Watching this movement move around, you cannot do. And so you can see here on my recording is my candlesticks are red and green, and I have the money right here. And when I'm actually trading on my screen, it's not like that. My chart is that blue and white color, and I actually don't show the money. I have just this hidden because, you know, I don't want that to be messing with me psychologically. You know, seeing this number in real time go up and down, especially as I get larger and larger size over time, it becomes really hard to, you know, manage those emotions. And so here, I like to generally go for about 3x, but again, over time, I've got a little more looser with my management style of seeing what the market does to manage my trades and scale out. But when you first start out, I would 100% stick with more of a fixed profit target. You could just get out at 2x of your profit target. That's a great starting point. And one thing you can see here is I went break even. And so my reasoning for going break even and taking risk off the table was that we broke up here to, you know, where I'm about at 2x. And this orange line right here is actually news coming up. And so this is a news release. And so how I trade news releases is generally I like to avoid them. But if I'm in a trade like this and I know how oil usually responds to this news release, this is just a news release where they post inventories. It's not something crazy news release like in the S&P 500 markets. This news release is just inventories. And I've noticed over time is what this does is it causes some volatility for a couple minutes, but it generally goes in the direction that the trend is already doing. And so, you know, my reasoning is, okay, well, we're already in a downtrend that's shifted. And so I think the overall trend is up and I'm at break even. And so I'm okay holding through some volatility with the idea that I think it's going to produce more directional movement that I want. And so you see it, that's the news release happening right there. And I moved up below the swing with the idea that, okay, that's nice movement. You can see I'm really in the green now and I want to let this thing move. But now that we're, you know, moving really rapidly, you got to start saying, okay, well, I don't want this thing to snap back and I give all that profit up. And so I was kind of seeing that, okay, we're in an uptrend here and I'm looking to scale out 2 contracts with the idea that we might have a little bounce here and it goes up. And so I think I closed out about $1,000 there on that profit. And I still have this one contract with the idea that, well, we had this uptrend and I think we could continue higher. You know, there's a little bit of volatility coming in here. And so I'm going to stay in until I think that it looks like it's going to break this uptrend. And so the market starts to, you know, kind of go sideways here and make essentially I believe it starts to make a little bit of a double bottom here at this trend line. And again, I'm going with my plan is when you're managing, you have to go with a plan of what you're doing and stick to it. You can't go into a trade and change how you're going to do things. And so for me, I think that, okay, this is a great little bounce off this trend line. I think that if it's going to continue with this trend line, it's going to hold right here. And if it's going to, you know, crater and come back down here, lose this momentum, I would rather get out here. And so jump out of that trade right there and I move on with the day. And so one thing I want to show you that I didn't talk about in that last trade is a really massive thing about these trades is understanding the overall market. This setup happens quite often to where you can find trades just about daily. But the thing is the overall market pattern is very, very crucial. And so this trade right here, you can see just going quickly through that checklist again, is we're at a support level. That downtrend is broken, and it's made a really, really clean double bottom here. And even, you know, that kind of fake push lower again that fails. And then it's had some strong bullish bars here. And so I jumped in long, betting that the market was going to go up here. But I only entered in one contract. And the reason that you want to go into every trade with a mindset of the bigger picture is the thing that matters the most is that is really what governs everything. These micro patterns of, you know, a double bottom happening, a nice candlestick pattern that shows, you know, a strong rejection, those happen all the time. You can find those everywhere. And so, you know, that's why, of course, the first thing is you always need to wait until you're at that key support level from that big picture, but also you need to understand that the overall market pattern and the conditions that the market in are important. To quickly show you what I mean, one is when the market is just not trending at all. Look at this movement right here. This is in the ES futures. This is another market I watch, and you can see that the candlesticks are just all over each other. They're super choppy, not moving around. And what this does is it just makes it so there's less movement possibility in the market. And so this trade right here that I entered in on the NASDAQ, I entered in at 1/3 size. You can see I'm up here, probably about 1.5 to 2x, and my risk on it was way smaller than the last trade. Generally on that last trade, if I was up here, I'd probably be up like $1,000 or $1,200. But because I did smaller size, I'm up less. And the whole reason why I did that is because I thought that the overall market structure was not as good for a good trade. I didn't think that it was likely that the market had a good reversal to where I could capture 3-4 times my risk. You know, maybe I'll capture 1 or 2 times like I'm doing right here. I've already moved up, you know, below this swing right here in terms of managing my stop loss. But the idea is that it's not worth risking a ton of money. You know, I didn't feel like it was worth risking $800 on this overall setup that I was seeing. And that's just because, again, the overall market structure didn't seem like it was there. The biggest thing with these trades is having that room to profit. And so what I mean by having that room to profit is if you look at the market right here, like this one, is okay, if you buy down here, does it really look like the market has the volatility and movement to move up a ton in your favor for where you will get a good trade? Because every time you put on a trade, you are risking losing money and you don't know if it's going to play out. No matter how good, you know, these signals and patterns look, every trade could lose. And so when you're not sure about it, you have to understand that's an important signal and that you should probably risk less. Now, I think it's okay to risk some because the signal's still there. It's still pretty good. Again, you don't know what the market's going to do, but take less risk. And so maybe don't do this right away when you're first starting out. But one thing to think about as well is with scaling in and scaling out is also trading smaller or larger size based on the strategy. Even though I trade one strategy here and it's one specific pattern basically every time, it's still always different every single time. Here we are on the NASDAQ, honestly just a couple weeks later, and the market is still kind of in this range. Now, one thing though is, so we're still looking at the NASDAQ here, and check this out right here. And so we're currently at the highs, and so this strategy, you can bet the market's gonna go down or you can bet the market's gonna go up. So you can make money both directions. And so here, the market has been bouncing up in this area for quite some time. And so when I opened the charts on this day, the market was trading right here. And so we're kind of a little bit away from this zone. But again, remember, zones are subjective. You can come up to the zone like here and reverse a little bit before it, you know, because maybe the zone is a little bit further and it is all the way down here. And so I'm okay with trading away from the zones a little bit, but again, don't go too crazy with that. And a big thing that really helped me with this trade right here was seeing that there is also this downtrend line right here based off of these two swings that the market was butting into right here. I saw that the market was likely going to potentially bounce there. And again, this is only if all of my other checklists line up. That's the whole thing. The market can reverse anywhere, but the big thing is to have it at these levels, and so have it as all these things line up. And so going through a lot more quicker now is, the first thing is, here's our uptrend. That is very, very clearly broken. The market's been going sideways. The market opens up at 6:30 my time. And so you can see right here, the market kind of went sideways for a while, opened up, and then started to move. And so just like we were talking about last time, is I want to see is seeing this loss of a momentum right here is great, where the market starts to go sideways like this. A lot of the time that can show that, okay, well, the market's going to lose momentum and start moving lower. But the key is, when I see something like that, is not to just short and bet the market's going to go down with my stop above here, because what I found, again, just like we talked about before, is the market needs to make some kind of reversal catalyst, something that where it essentially makes an attempt to go the other direction than you want, which gets people excited. A lot of people might see this as, okay, well, the market's gone up here, it started to go sideways, it's kind of sitting there gaining more momentum, and then it's going to break out here, and the trend's just going to continue higher, and I'll make a ton of money buying on this breakout right here. And that can totally happen, and maybe that does happen right here. But what confirms it for me is when you see this massive move back lower, is when it gives that back up really quickly with momentum. And that shows me that sellers are coming in here. There's a lot of strength on the seller side, and this strength of the buyers that they apparently had here for a couple minutes was given up really quickly. And so that's kind of the third thing checked off on my list, is seeing that happen. And so when I'm trading and I see this reversal happen in real time, it gets really exciting, and you start to think, when it started to go this fast, FOMO sets in and you think, oh my God, I have to get in here right now. What I've noticed over time is these kind of moves right here is, if the market makes a big move like this and it goes sideways and it does end up starting to go lower, it's gonna give that whole move back up. And so a lot of the time for a trade like this is my target's down here. And so if I'm risking something like this, and the target's down here, that's amazing risk reward like we want, right? And so the hard part is, though, when you see this happen, is not FOMOing, which what I mean is fear of missing out of jumping into the trade, because it's so easy to think, oh my God, it's moving so quickly, I'm gonna miss out, I have to jump in. And what happens a lot of time is you'll get a really bad entry, the market actually will pull back here, and you can see the market is pulling back here. And again, going through that checklist, is this reversal is not confirmed yet. It's looking really, really good, but the market, I have seen plenty of times where the market will do this, come down, and then just shoot back up and make a new high. And so the whole idea is waiting for this lower high right here to happen. And I remember it wasn't that many days ago I was in this trade, and I'm waiting for the market to show me that reversal. And so it started to make it right there. And so here I'm starting to put orders in, thinking that, okay, I think I want to get in when it breaks lower. It's kind of made this break here, and I want to get in on the break of this move that it's made. And so I'm feeling a little nervous because, well, the market's really choppy, and so I don't want to get in based on a little bit of chop. But once this candlestick formed really bearish, I thought that's a great signal. I have to just push through that nervousness, because you're always going to be nervous getting a trade. I've done this for years. I've practiced this strategy and been successful with it, and I'm still nervous every trade I get into. And so no matter how confident you're in, there's always going to be that uncertainty, because looking at this, you still don't know what direction the market's going to do. You don't know what it's going to do. And so it can just take forever to, play out sometimes. And in reality, the market over the last couple weeks going into this trade has been insanely choppy. It's just been really back and forth, and just a crappy market to trade in. I've only taken a couple trades over the last few weeks. It makes it really unlikely for the market to just work out really nicely and just shoot lower. It's more likely to, see what it's doing here and just sit there and chop. And so what I found is I still try and just give it some room. But when I see the market make, kind of a move lower and a pullback like this, and attempt to keep going lower, you can see I moved my stop loss below there. and then it's made another push lower here. And so I'm starting to see, okay, is there a trend line that I can look at to see where the market's with? And so once I see this trend line start to, hold here, I'm thinking, okay, this is another little pullback here. I want to, close out my profits if it looks like it's going to start to bounce there. And so, anytime the market makes kind of a double bottom like this, it might just start to knock me out. And so that's the biggest thing when it comes to managing trades, is get out when the market is kind of telling you that it's not great. Do not get married to the trade, because at the end of the day, my best trades, like you saw in the last one, there might be a little bit of chop in the beginning, but that's when the market's, switching that momentum, versus now that momentum should be moving in my favor really well. The trend should be shifting. And if the market's just going to kind of sit here and go sideways, I don't want to be in it, because I want to be smart with my stop loss and get out when it looks like it's going to go against me, or just sit around and not really give good profits. And so you can see here, it's kind of sitting around, and it eventually just kind of knocks me out there. And I believe it just chopped around there for quite a while. The market opens here. Let's say this is the S&P 500 right now. It opens up at 6:30. And oftentimes the market has jitters in the morning. For the first half hour, it'll move around and potential news will come out. A lot of times news comes out 15 minutes after the open, or at 7, half hour after the open. And so this causes the market to potentially run up into that news and reverse the price of the market. And so if a couple of the factors that we're going to talk about show up, you can look for a potential reversal. And a lot of the times is what can happen is this sets up the move for the day. Is where right here you can see is on this day, the market opened up, it made a fake higher. It attempted to continue. We had an uptrend on the left side going into this day. It kind of had a pullback, and then it attempted to continue higher. And instead what happens is the market makes that fake higher, the news pops and comes out, and instead around 7 o'clock, a couple minutes before, you can see this trade I entered in about 15 minutes before 7, but around this time is when the larger move, bigger banks are starting to wind up their trade for the day. And so you can see with this trade is it started a much larger move for the day. And this trade I got about 4.5, 5 times my risk. And so in this trade, I was only risking $350. And so, that can be a lot for some people. And so for me, that's a little smaller on the size for me right now, but that's how much I entered in for this trade. And we'll definitely talk a little bit about more why later, but I was able to capture an insanely big move going lower, because this is how the market set up for the day. Is it had this little fake higher, that timing came into play, which is so important, and those factors that I look to see show up happened, and then I jumped into a trade based on that. So I entered in right here pretty much at the break, and then had my stop originally here, and the market kind of chopped here for a while, almost actually came and knocked me out. It got really close to hitting max loss, but it didn't, and it sold off here again and kind of sat here for a while, and then made a nice move lower. And so how I'm looking to manage this is generally I like to go for 3 times my risk as a good target. And so today, you can see down here, I have a risk reward tool right here that says if I'm going to enter in here and my stop loss is here, it helps me target $600 worth of risk. It tells me how many contracts I need to trade. This is what I use on Ninja Trader. And so it says at 3 times my risk, I'll be up about $1,700. And so for this trade, that's kind of what I'm targeting. And this aligns up really well, is if we look at the big picture again here, this is the 15-minute chart. And I think that we've made a nice move down here so far. We've captured most of that move we were looking for. And there's that kind of minor support level here. You can see it here on my other chart down here. And, just looking at some of the other levels, oil's kind of just going back and forth in this area. So I think there might just be an upper range here. Now, of course, we could break lower here, but it's better to target for my 3 times risk that I go for on average. And so that's kind of what I'm looking for here. Is I do have kind of a fluid management style. My stop loss here is about here. I've moved it down slowly. I originally moved it to break even once we kind of made this original move down here, and then I moved it to this pullback, and then there's kind of a downtrend line here that seems like it's broken now, and then I've moved it to here as well. And so originally I kind of went through the entry checklist pretty quick. And so again, to get in, my checklist that I look for is, well, one, we were up at that resistance level. This trend line was clearly broken after this nice bear move right here. And then a couple other things was looking for a nice catalyst that the market is showing a clear reversal, because when you're trading reversals, it can be really tricky to get in at the right time. And so the way I do that is, well, one, this uptrend is broken. That's a really good way to confirm. But also you can see these 3 candlesticks right here, the really big bearish red ones, they really show something else has changed. The market was just kind of slowly chugging higher. And then all of a sudden there's boom, a massive break here. And I think that really shows some loss of momentum to the upside, and that there's a bigger picture play in play. And so as I get closer to this, I'm just gonna watch how it reacts down here to this support level and see what happens kind of in real time. And I'm looking to get out of this trade here. As this breaks, I'm gonna move my stop over here to 3x just to capture that. I don't know what the market's gonna do here. It might just do a little pullback here and then keep going. And usually it'll, I like to give it a little bit of wiggle room, but I also want to close up this trade here because I'm up 3x. It's at that support level. I don't want it to bounce really quickly here and have me potentially lose a lot of these profits. It's okay to kind of let things play out. And so it looks like it's going to knock me out here. It was really close right there. Hopefully this will hold, because I do like this downtrend on a big picture. It does look really good. This is what I want to do. I want to follow my plan. I want to let things play out in my favor so that I can, over time, best capture the best risk reward. And so knocked me out there at about 3x, still a really good win. And so going back to entering into this trade, after it made that really nice break, it kind of sat here for a while and made what I like to call a bearish flag. It's just kind of a continuation pattern. And so once it kind of broke this low, that's when I entered in. I put my order right here, it broke below there, and I got in and put my stop loss right here. And so from there, I have my risk reward tool. It told me to buy 3 contracts of oil's futures, because at that risk amount of entering in here and entering here, this risk right here would be close to $600, and that's what I like to target every time. And so then I just wait for things to play out, and here it got really close to knocking me out. That's okay. And then it kind of moved lower, and so now I'm out of the trade. It sucks kind of getting out, especially if this looks like it's not going to make a quick bounce here. But again, I follow my strategy, and that's the biggest thing that you can do when you're trading. We're looking at the NASDAQ futures, and the market had big moves like this. And so where are the key areas of support and resistance? That is my first thing I always want to look for, because I'm looking for reversal trades. You want to be trading off of the key levels. And so here, well, the market's bounced off of the highs and lows here multiple times. And so that's why I drew a support zone and a resistance zone. And then I always do that on a 15-minute chart. The whole idea is, again, thinking about that domino effect. I want to see the big picture levels, because that's where it's more likely we're going to have a larger move lower off of those levels. And so looking at this morning, if we go to a 5-minute chart, I like to go into these smaller time frames again, because using the domino effect, I want to get a more accurate entry. And so the market opens up at 6:30 my time. I'm on the West Coast. And so the market opened right up here. And so the first couple minutes, if we actually go into a minute chart, just because it'll show you a little bit more action, is the first couple minutes of the market are usually pretty crazy. And so I always stay out of the market for the first 10 to 15 minutes, just because the market always has noise when it first starts out. And so it could go like this and like this. And so I don't want to jump in a trade and get knocked out in this garbage right here. And so what I was looking for this morning, and what I actually posted in the chat room as well, I wanted to see the market either make a double top here or some kind of breakout of the previous high, because I wanted to see it make an attempt to break this high and then fail. Because I always, again, kind of going with that reversal 3-line strike pattern, is I want to see the market make an attempt to go the opposite direction and fail, because I always find that as the strongest way to jump in and capture a reversal in the other direction. And another thing, the second thing in my checklist is always making sure that the current uptrend is broken. And so you can see on a 1-minute chart here, I've gone off the lows and the market kind of bounced here. I wanted to make sure that the uptrend is broken. Maybe you could draw here, that one's broken. And so any uptrend line that I try and draw is broken. And the key there is that once that's broken, just like with this 3-line strike pattern is, it generally has an uptrend. And then once that uptrend is broken, well, it opens the door for the market to make a clean reversal. And so that's exactly what I'm looking for. Every time I look for a reversal, I want to see that uptrend broken. And then from there, I want to see the market make an attempt to keep going higher. I never jump in on the break of that trend line because the market, a lot of the time, like you see here, is it moved lower and then broke and reversed higher. And so as this is printing candlesticks, I'm now thinking, okay, now I'm on a 1-minute chart. I am looking for that final confirmation. I want to see it essentially fail here and make our 3-line strike pattern form, and I will jump in on the low or the break of that candlestick. And if we actually switch over to the recording now, because that'll show you more of what I'm doing in real time, is the market moved up here. And so I'm just thinking, okay, either this is going to break out higher or it's going to reverse and show a nice bearish candlestick, and I want to jump in on that. And so all of this is about patiently waiting for that setup to happen. And so as it starts to break this, and so this red bearish candlestick right here, again, is not enough. You need a big candlestick like this. And so it's hard waiting through that candlestick because it can feel like, oh my God, I'm gonna miss out. And instead, I always wait for the candlestick to close. And then from there, the market just chopped around for a little while. And so my thought was, okay, that's okay. I wanna get in on a break of the low of this candlestick. And so it then breaks that. And then from there, it shoots lower. And so I put my stop loss above here, as my thought is, you know what, if the market comes down here and breaks and keeps going higher, again, we're going based off of the structure of the market. And so because of that, I want to get out and cut my losses at that point. The whole idea is because I'm taking reversal trades, I risk a smaller amount to gain a larger amount. And so the market started going in my favor and it made a little pullback here and kept going lower. And so I'm thinking big picture that the market is either going to sell off here and keep going lower, or it's going to reverse and knock me out, and I'm okay getting out. And so the one thing I did here that I've actually never done before is as I saw the market come up here, you see how my stop loss is right here above this high? I actually moved it back to break even. And the reason why I did this is because I realized that the market was kind of being choppy, but I made a conscious decision that I'm okay going back to break even because I think the market needs as much wiggle room as I can give it. And I'm okay giving it up until break even. And so you can see right here is the market. My stop was originally right here. The market would have knocked me out right there. And instead, it barely moved up there and then reversed back lower. And so it kind of chopped around here for a little while. And so I'm just still here, just sitting, waiting for this to play out, because the big thing that I'm looking at is if we go to a larger time frame is, the market's about here, is that there is no support anywhere in this area. And so for me, I see that as there is nothing holding this up if it breaks lower here. All it is there's just anytime you're trading a reversal is the market's going to go up, lose momentum, and then it might just sit there and chop for a while before it switches that momentum lower. And so eventually, if we go back to this, now it's all of a sudden that momentum is switched. And so it just takes time to do that. And sometimes that can take minutes, hours. And so all of a sudden, I don't know what happened. Maybe some news came out, the market just cratered. And so for me, I'm thinking, well, the market's been choppy and you can see we're at that support level now. I switched to a very tight trailing stop because we're above my profit target now. And so what I did was I moved to just the previous candlestick high. And so as we moved down, just previous candlestick high here, this candlestick was so big that I moved to the middle of the range. I think if I had multiple contracts, I probably would have just taken one off here or moved my stop to here and had the other one here, but I was trading only one contract because that's what my risk allowed. And so one key thing about this strategy is finding the correct support and resistance zones. And so in this video right here, I'm gonna walk you through the 5 key concepts I use to find the correct support and resistance zones, because if you don't do that, you're likely to try and take trades in areas where the market actually isn't gonna reverse, and you're gonna lose more money than you should.